like they are in a full-on bear market or recession right now. Now, luckily for anyone who's invested in the S&P 500, which that's my largest stake of all, we're only down about 10% from the peaks there. But these individual stocks, yeah, GEV, Stacey, that's right. These individual stocks are really taking a beating. Um, Stocks that still look good to me are like HWM still looks really good. And when I say look good, I still love all the stocks that I've been picking this whole time. GE looks really good right now. But they've just kind of fallen out of bed. Even JP Morgan, take a look at JP Morgan, ticker's JPM. This has been one of the most stable, steady stocks all year. And it went from 280 down to 230 over the last couple of weeks. We're talking about JP Morgan Chase, the bank stock. Again, not some penny stock or some regional bank here. So things have been really, really ugly. A lot of people are saying bear market, recession incoming. Could be. I'm not here to say that it definitely won't happen, but I don't think it's happening yet. I do think we are getting a massive scare from the tariffs. Just so much uncertainty right now. Not a lot to, not a lot of confidence for investors right now. We still have inflation that people are dealing with. We haven't really talked about inflation as much, just because so much of the headlines have been tariffs, tariffs, tariffs. So I've got some data today. I'm going to walk you through it. I'm going to walk you through where I'm at with it. Again, I think that this week will be the bottom, the short-term bottom. Now, I personally would like us to see make all-time highs from here. I'm currently at this moment not convinced that we will, but I do think we'll get a 70% retracement back towards the top at the very least here starting this week. So I've got a little bit of dry powder ready to roll here. I might wait until after tomorrow's CPI report. I'll talk about that here in a second because if that comes in bad, this slide could just continue. But we haven't really seen strength, and that's the unfortunate thing. This is like normally you'll get a slide where the markets will fall 3, 4, 5 days in a row, and then you'll chop for a week. Then they'll fall 3, 4, 5 days in a row and chop for a week. This has just been straight down. So it has been like walking up the stairs and taking the elevator down, as Roger says. So, Keith, I'm sure hope this is the bottom. Same here, Keith. Well, let's dive in, guys, into the opening playbook. So what's on everybody's mind today is a bear market incoming, is a full-on recession here. A lot of people, and I honestly don't know, I wish I knew, but a lot of people are speculating maybe Trump is trying to force a recession so he can just get it out of the way and work towards his plan going forward. So kind of just washing out the Biden administration. It'll be easy to blame and point fingers to them if that were to happen right away in Q1 or Q2 of this year. And then his policies, he can put that into place and maybe write it higher from there. That's definitely a speculation. And the real reasoning behind that as well is the U.S. has a record amount of debt due this year that they have to roll over, 8, 10 years out. But interest rates are so high right now that is not going to look pretty. So if he can cause a recession, bring down interest rates, and then roll it over, he's going to look like a superstar. So that is one school of thought right now. But that's more so speculation. So let's dive into where we're at right now. Good morning, Mark. Good morning, Annette. Markets here right now, and I can throw an update in here because we've just flipped negative across the board, minus Bitcoin and gold. Here, let me just throw this up here now. I always do this. I'll post it this morning, and then so this is what I'm talking about, the weakness that we've been seeing. So you just saw that screenshot. Actually, let me just do this. Here's the screenshot I just had. I posted this not 10 minutes ago. Let's just look at the difference here. We're just seeing this overall weakness. So this morning, 5 a.m., the NASDAQ futures markets were up 0.5%. Even this morning at the open, up nearly 0.5%. Look at this now down. We're about break even on the QQQ right now, but just overall weakness. Let me pull this up. We are not seeing this strength that you typically like to see at a bottom where the buyers are really stepping in. So here's the NASDAQ this morning. Decent open higher, then bam, here we go. Not a lot of direction right now. Let's take a look at the S&P. Bitcoin's having a nice little pop today, but again, look at that fade from the open. Let's see, S&P, fade from the open. Russell kind of chopping. Gold looks like it's gaining strength, which is to be expected. But again, this is like let's take a look at gold. This is what we'd like to see the NASDAQ and S&P look like. Let me zoom in for you guys. This is what we'd like it to see right here at the open. Some strength coming in, buyer stepping in, maybe giving us a little bit of confidence. but we're just not getting it. This is what it's been looking like the last couple of days, and normally we fade from here. So again, here's just an update over the last 10, 15 minutes on how much the markets have changed. Now this week, today, I want to be surprised if we see a little bit more profit taking because tomorrow we probably have the biggest inflation report of the quarter. I say that just because it's like our last sliver of hope right now. People are, if CPI drops, maybe there is some hope that we can look past these tariffs that are hitting the headlines. If CPI comes in higher than expected, that's going to be really, really bad, in my opinion. But we have that tomorrow morning at 8:30 before the market open. That is our main inflation report. It's the number one thing we look at to see how are we doing with inflation. Is it coming down? Is it staying flat? Or is it ticking higher? Then on Thursday, we also have PPI, which is a similar report as far as it relates to inflation for us. And then this is going to directly affect the news for next week. So let's take a look at what's happening next week. Wednesday, 2 o'clock Eastern time. Mark your calendars. Fed interest rate decision. So if CPI comes in hot this week, there is like a 0% chance the Fed is cutting rates next week. Right now, I think it's priced in very, very, very low. Less than 10% chance that we get a cut. The only chance that we do, I would think, is if inflation comes in wildly low, which I don't think it will. However, that report will directly affect what the Fed has to say. If inflation comes in higher than expected, the Fed might be more hawkish, meaning a little bit more negative towards the market and what interest rates might look like in the future, which then could cause another tumble. CPI comes in lower than expected, or if inflation is slowing, then the Fed might come in and be a little bit more dovish, meaning, hey, Powell come in and say, hey, it looks like inflation is cooling. We might get more interest rate cuts than expected. That would be very bullish for the overall stock market. So that is the big news in the economic world for the upcoming week. Again, the big one is tomorrow morning, 8:30 a.m. CPI report. For the charts of the week, I've got 3 charts for you guys. And this, again, I try and keep it balanced here. I try and keep it bullish and bearish so you guys can get a little bit of both information and make your own decisions from there. So charts of the week here. This is the market desk US risk versus demand indicator, and it's turned negative for the first time since December of 2021. So it just measures how risk on investors are. And you can see it's dipped down here to the blue section, negative for the first time since December 2021. Does anyone remember what January 2022 was like, or the rest of 2022? Very, very bearish. So here's your bearish chart for the day. Overall demand, risk demand is negative. The last time that happened prior was 2018. Does anyone remember what happened at the tail of 2018? The markets took a 20% plunge. So again, this is typically a bearish indicator. However, let's keep in mind, let's look back here, 2014 through 2017. Yes, they weren't the prettiest markets all the way, but we did have a very, very strong bull market here. So this does not mean without a doubt that we're going to see a 20% correction here. But it is just a bearish little indicator. On the bullish side, on the flip side, the S&P 500 hit extreme oversold levels for the first time in almost a year. Not quite a year, but almost a year. So this could be a good time for buyers to step in. With that said, whether you're bullish or bearish, I came across this chart. It's a much prettier chart of what I have, but here's your seasonality for the S&P over the last 20 years. Here you see that February into March that we've been talking about, that downturn that we expected. I didn't expect it to go this long. I expected it to end about, I don't know, half a week ago, a week ago. However, this is very, very typical for this time of year for us to see some gains copped up before we get that 90-day hot streak that we've been talking about. Now it's just a matter of when is it going to hit. Again, I think that this week is the last of this downturn we're going to see for the near term. I don't know if that means we're going to all-time highs from here, but I do think we will get about a 70% retracement back to the highs. What that means, if I were to pull up a chart of the NASDAQ here, is here's all-time highs, right? We can all see that. A 70% retracement would put us right about here, 520s range. Maybe here we'll get some resistance off the 50-day moving average. So 518, 517 range. So filling the gap about 70% of the way would be my estimate for where we're going to bounce from here. A more bearish reading would be about a 50% retracement before we make that swing high. With that said, how is everyone feeling right now as far as Are you guys starting to get greedy in the sense, are you guys thinking maybe now is a great time to be buying and adding to positions? Are you guys starting to feel more fearful where it's like, I probably should be taking some money off the table and waiting on the sidelines a bit? Just give me a little bit, just a little, say buy or sell in the chat. Buy if you feel like you should be buying right now. Sell if if you feel like you should be selling right now and waiting for a deeper pullback. Holding. Okay, there you go. There's a different one. Probably about 70% set. Oh, quick scalps. That's a good idea. I didn't miss it because I've got a lot of couple buys, mostly sells. David Rowe with the quick scalps. That's probably the best move right now. Just so much volatility. Careful buy, selective buying. Nice. Holding. Hey, Greg, buying gold and silver. I love that. I have been very bullish on gold for a while. So probably about 70% said selling, 20% say buying, and 10% saying sidelined or holding. Just to give you guys an idea, that's kind of the overall sentiment here in the chat. Almost 300 people in the room, so that give you a good idea. I will give you my analysis, but again, much like 4 weeks ago, let me just walk you through it. 4 weeks ago, I said we're going to get a sell-off. I was 1 week early. Markets went to all-time highs. I felt like, I'm a dummy, and then the big sell-off came. Similar thing happened here. I said, I think we're near the bottom. I told you this last week. And what came next? We got a new bottom, a new low. However, this week, again, I'm going to go ahead and double down on that. I'm not giving up on this analysis. I think we are right at the bottom or near, again, for some sort of retracement higher from here. So here's some fun data for you. If we get a 15% plus quarterly drop in the S&P, which we have not had yet, right? We're like about 10%. Let's see. Does anyone know where we are from the peaks today? Let me tell you. So we're down 9% from the peaks right now. So if we get another 6% drop in the S&P 500, which is not out of the equation at all, here's something really interesting for you. Quarterly drop, 15% plus every single time since World War II, the next year has been positive. So a 15% drop typically is a very, very good buy. If we get a 20% drop, 100% of the time, again, positive, all double digits. So again, if we get a 15% drop, that's probably a pretty good time to be getting bullish or adding to positions. If we get a 20% drop, that's a very, very excellent time. That's a rare opportunity to be adding to positions. Now, let's keep in mind, guys, we all remember 2008, that was like a 50% drop. So there still is more downside that could happen. However, over the next year, when we, close our accounts and come back in 12 months later, it should be higher. So this is just something to keep in mind when feeling fearful, when feeling scared. These double-digit drops turn into some of the best and rarest buying opportunities. So just keep that in mind. We're not there yet. I've been, I've got some powder dry. I'm looking to add this week. However, this would be a more prime buying opportunity if you guys are holding or waiting on the sidelines right now. For the fear and greed index, we are riding extreme fear. We've been this way for about a month now. You can see 1 month ago we were in fear, 1 year ago in greed, but 1 month ago fear. Then we've been hitting extreme fear week after week for like the last 2-3 weeks. Puts are trading higher. However, let me pull it up today. I think it updates a day late. So let's see what the put to call ratio looks like today. 0.92, same reading. So again, this is slightly puts in control typically to what we normally would see. However, we are not getting these extreme readings yet, which is really shocking to me, especially when you consider that right now we're seeing the largest put volume in history. People are calling it the Trump puts. We are seeing more puts traded than ever before, yet the put to call ratio hasn't really spiked. So when I see something like this, this is like, to me, I'm trying to think of an easy way to explain it. The ratio to me is much more important because what I'm expecting is we're also seeing more calls traded than ever before. So more puts, more calls than ever before. The ratio, however, hasn't really gone to extreme territory yet, which is a little bit concerning for me. It would be like, I don't know, people say that the debt's at all-time highs, and they've been saying that for the last 20 years. Well, it's just because there's more of it now. There's more dollars in circulation. Same for this chart. There's more puts traded than ever before. Well, there's more options being traded than ever before as well. So it's this ratio that's really important to me. Again, I typically like to buy when we get above 1, and we haven't gotten there yet, which is pretty shocking considering where we're at right now in the stock market. Now, let me give you some more bullish news, some reason to get greedy a little bit. And again, this is all tentative greed. I thought the bottom was going to hit late last week. It did not. We went lower. I now think it's going to hit this week. Here's some good, just some data for you guys. Stocks above the 50-day moving average, percentage of stocks trading above their 50-day moving average, which, think of it like stocks at or near all-time highs, trending higher. We're now down to 25% of stocks trading above their 50-day moving average. This is a very rare reading. Again, this has only happened a few times over the last year. Each and every one of the times it got down to 25% was a pretty awesome buying opportunity, with the exception of this one here in January, which, let's see. I mean, it was a fine buying opportunity, but not like what we saw in August or April of last year. April's was let me just tell you, about an 8% pullback from the highs here was this buy. August was about 12. This is a QQQ. Sorry, I'm reading the QQQ. Let me flip to the SPY. So again, 8% drops about 8% from the highs here. In August, close to 10% from the peaks here. This one here in January is just more of an uneven market, in my opinion. About 5% from the peaks here. But right now, we got with this reading right now, S&P is trading 9% below the peak. So again, very similar to what we've seen in the past. This is a typical time for buyers to step in. With that said, when we look at stocks over their 200-day moving average, so the S&P 500 right now is not above the 200-day moving average. It is below the 200-day moving average. This is not a positive trend. This is what you would call a downwards, a negative trend on the S&P 500. Look, you can see the Newton momentum. Check this out. Newton momentum flipped red right here. Momentum flipped red at 600. It's gone freaking straight down ever since. Under the 200-day moving average. So you would expect most stocks to be under the 200-day moving average, which we do have. 35% of stocks in a downwards trending market. However, we're not even to extreme levels yet. So the bottom of 2022, we were down to 25%. So there's still more downside that could come. So I'm giving you bullish information. I'm giving you bearish information. However, I am still leaning much more bullish than I am bearish at the moment for a short-term bounce, a retracement of at least 70%, which on the SPY would put us back near 595 range. So we're at 558 now. That would be a $40 move. So about, 8% to the upside from here, roughly speaking. Seasonally, we have seasonality on our favor, or on our side here. Also, I came across this chart yesterday. I sent it to you guys in Telegram. Hopefully you are all in Telegram, but this is your typical, over the last 20 years, your typical March price action. They call it the Ides of March. I've never heard of that until this year. My mom actually, who's a big trader herself, she got me into it. She was the one that originally told me about it and pointed me towards this. We've been talking about it. I've been showing you this chart every week that I expected last week we kind of get our bottom. But she sent me this one, and this one says the 17th is the low day. So again, really, really close. This is seasonally what the markets look like in March. Dip, dip, dip through the middle of March, and then turn around from there. So we've got a lot of things pointing right now towards a temporary bottom in the market. A lot of this negative news is already priced in, right? No one's going to be shocked by Trump putting down more tariffs. It's already, we're already expecting it at this point. So here's our presidential seasonality chart and where we stand right now. We started off the year stronger than expected, and now we've pulled back further than expected. So again, we are following this very normal inauguration year market trend, just a little bit more extreme volatility. We're seeing bigger upswings and bigger downswings than usual right now, which is normal. That's within a normal range. However, it does kind of present its own opportunity, which I'm going to have Nate Tucci on here in a second. I like to give you guys differing opinions. He's got a cool little way to trade this volatility, and he'll be on here in just a couple minutes to give his take on the markets as well. So nothing in my analysis has changed. I thought we were going to bottom. I thought the bottom was going to be 575 on the SPY. We're at 557, so a bit lower than my bottom. However, the outlook here, again, I still expect that we're going to bottom out here sometime this week, maybe early next week. Jason says St. Patrick's Day. That's right. Yeah, the bottom on St. Patrick's Day. There you go. So I do think we are very, very close. Good time to start looking for buying opportunities. Now, if you're a risky trader or if you like to take risk, remember higher risk, higher reward. So if you like to go for those bigger rewards, in my opinion, maybe add today because we have CPI tomorrow. If it's a positive report, it could really, really spark this upswing back higher. However, again, bigger risk, bigger rewards. That also means bigger chance of loss. If we have a poor CPI rating, I think we're going to continue lower through the week. So there's your little tidbit today. If you're feeling extra bullish, you might want to front run the CPI. If you want to wait and see, which is what I'm going to do with my dry powder right now, I'm going to wait and see what happens this week. And if we get a good base, I will be adding towards Friday. So here's my outlook for the week. I'm going to pause really quick in the chat here, make sure it all makes sense. Anyone got any questions? David, I think the graph needs to be shifted 2 weeks. Which graph are you speaking of, David? Yeah, markets are just pitter-pattering back and forth. QQQ's back down again. David, is this the one you're speaking of? Let me see. It says trading days. Oops. Program. Omar thinks we're going to 490, which is about 20%. Definitely could be, Omar. The question, Omar, that I have for you is, do you think we're going to go straight to 490 from here? Or do you think we're going to get a little retracement higher, a bounce back here over the next few weeks or months? That's the question you have to answer. David, oh, okay, gotcha. You're saying shift this to the right about 2 weeks. I see. Yeah, I would agree with that, David. That is kind of where my analysis stands as well right now. If you were to take this and just move it 2 weeks over, it's more in line with what I anticipate. All right, for earnings coming up, guys, we're pretty much we're post big earnings season. There's a couple of names, a lot of small names, a couple of big ones. I didn't post it here because there was not really too much to write about. So that's positive. Well, positive in the sense that we made it through this earnings season. And overall, I know the markets weren't super pumped on it. I think earnings were overall positive. Revenues were up. I mean, did NVIDIA double their expectations again? No. Did NVIDIA sell off for that reason? Probably. However, it's still a very positive reading. The company's making more money than ever before, and yet it's in a 40% drawdown. So I think that the earnings overall were positive. We're moving forward from there, but not a ton to write about right now. For the sector view, same chart I show you every week. Seasonally speaking, very bullish next 3 months coming up. Oh, someone hopped on. Bullish next 3 months coming up. All 3 sectors, or excuse me, all 11 sectors bullish for the 3-month period, historically speaking, seasonally speaking. Only time that happens ever is March, April, and May. Last week for my sector picks, here's what I had: financials, communications, utilities, and real estate as my wild card. Financials got absolutely drilled with the tariffs. So let's look at this. This is probably the biggest week over week shift that we've seen since I've started the show 2 months ago. So look at this, guys. These are our power rankings in the sectors. Staples moved to the top. It jumped 4 positions. So these up arrows means week over week, how much did it move? It moved 4 spots higher. Communications, one of my best picks, moved 1 stop higher. Utilities, which was another one of my favorite picks, moved to number 3 in the rankings. So very, very positive. However, like I said, financials got drilled. Fell 3 spots. Bitcoin got hammered. Fell 5. Discretionary sector, which I told you guys last week, stay away from discretionary stocks. A lot of them are heavily influenced by these tariffs. It got absolutely pummeled. Look at that, down 14% over the month, discretionary stocks. Bitcoin's down 20% over the month. So these two are getting the worst of it. And then tech is next at the very bottom. It's crazy. When I started the show 2 months ago, tech was at the top week after week after week. Now it's at the very bottom of our power rankings. What this is this is the 1 month, 1 month return in the sector, 3-month return in the sector, and 6-month return in the sector. And then I average it out just to see the smooth trend, which ones are trending the best. And right now, staples are at the top. Communications even took a hit. It's still number 2, but it took a hit. However, utilities are heating up. Even real estate looks decent over the last month, up slightly, while most of the sectors are down badly. So top and bottom picks, I'm just going to slim it down. I'm going to stay the course with communications and utilities. And I'm cutting out financials for now just because there's so much uncertainty, so much volatility there. With that said, like I mentioned at the beginning of the show, let me pull up JP Morgan. One of the best stocks of the year, JP Morgan. This thing has been an absolute beauty. Every dip, Wall Street's bought it. Bought it, bought it. It's funny, it is Wall Street. JP Morgan is one of the biggest institutions. Look at this now, just getting absolutely pummeled. I love this stock. I think it's a really great stock. It could be a good buying opportunity here at the 200-day moving average. But as for me right now, I'm just personally staying away from financials right now just because of the tariffs. They're being so volatile. Into the nitty-gritty, my picks for the week. Funny enough, Progressive technically is a financial stock. However, I see it more of a staple financial. And we've been trading this one week over week. It's actually down 1.5% today. Good buying opportunity potentially. But I like Progressive right now with the profit target of 296. So right now it's at 274. What is that? A $20, $22. So about 7% from here on the stock. On the options, depending on your trade, you could get much bigger returns. So PGR right now, let me go ahead and just flip over I'm going to go to my chart. So down here and see if there's anything else good I can give you on the Apex indicator. Again, it can be tough trading to the upside with so many stocks below their 200-day moving average, but let me just take a look. All right, let me AJG, I gave you guys that one a few weeks back. It's very similar to Progressive, both insurance stocks. That one's also looking good. Lilly almost hit its profit target. That's funny, David. Yeah, I should get Flo on a webinar. That'd be awesome. If we're looking at staple stocks, actually, this one, O'Reilly's technically consumer discretionary, but it's an auto parts. I think this is more of a staple in my opinion, even though it's labeled discretionary. O'Reilly looks pretty good as well. It's in a nice uptrend on the weekly chart. This one has a very lofty price target, 1483 right now with Apex. And it's been going up and up and up. Great trend on O'Reilly. Very expensive. I would look to wrap it, maybe wrap it a month out. So if I were to go here to the options, see what the liquidity, there's not enough volume. Wide bid-ask spread on O'Reilly. So maybe this is a stock buy for you then, which is still, I mean, it's still got some positive upside there. About 10% here upside for the stock. So that's very positive. But right now it's just Progressive, AJG, and O'Reilly are the ones that stick out to me. For the hot sheet picks of the week, and this is more of a just trusting the data, trusting the system. We've got this nosedive in the markets. We've got a potentially good buying opportunity, potentially a stabilization and bounce back here, maybe a 70% retracement back to all-time highs. I think Amazon's going to be one of the biggest beneficiaries of that. And right now, as of today, it is a seasonally strong stock. Here in the chat, I'll post the hot sheets where you guys can grab them. They're free. You just pay for shipping. We'll ship them right to your door. But what this is this gives you dates of stocks that have gone up every year for the last decade. We're just using data to our advantage, to our side to try and give us an edge. So right now, Amazon, if you're to hold it for 18 days, it's gone up every year for the last 10 years from March 11th through, what is that, the 29th. So March 11th through the 29th, Amazon is typically very bullish. It's gone up every year for the last 10 years, average return of 3%. So that's my hot sheet pick of the week. If you guys want to go ahead and get the rest of the hot sheet picks of the week for March, April, May, the rest of the year, click that link in the chat. I'll ship them to your door. They're cool. You have them on your desk. Let me show you mine. Just show you real quick. Hey, Nate.
What's up, everyone?
What's up? I just told everyone actually that I was going to bring you on, and I'll show you why I specifically invited you. But real quick before I do, so what happens? You click that link in the chat. You get these cool little hot shakes in the mail. My camera thing is really throwing me off here. Let me see if I can do this just to show you guys. All right, everyone can see these. So you get the ticker, the entry date, exit date, and it's really getting thrown off here by this blur on the camera, but they're pretty cool. Have them on your desk. They're free. Just click that link in the chat to get them shipped to you. Mark, no, you should not. Give us a call, Mark. If they haven't shipped it. There's also an online PDF version. So when you sign up for them today, they will be coming in the mail. Give them a week or whatever it takes to get to your door. But you'll also right away get an online version that you can have as a PDF. For the momentum picks that I like right now, Kroger looks really good. This is a staple stock. So we just saw staples have been rallying higher and higher. They're now the #1 sector over the 6-month trend. Look at Kroger. Look how beautiful this trend is. Momentum's just turned positive again. Last time it did was right here, made a nice move higher, right? So we tend to take these momentum swings on strong stocks. Kroger is one of the best momentum picks right now via Newton. And as a bonus, PayX also looks good. Let's say it's probably down today. Oh, it's getting pummeled today. Maybe scratch this bonus here for you. But let me go ahead and pull up the long scanner today just to see, because I'm starting to get bullish again. I want to see which stocks are going higher. And so far, unless it's frozen on me, no new stocks on the scanner today, with the market slightly down. So Kroger looks really good. It's a staple stock. Write that one down. Progressive was my Apex stock for you, and Amazon was the hot sheet pick of the week. Now, before we go, like I said, this is the battle plan I've kind of given you all year long. Week after week, I've shown you the same chart, and it has pretty much followed this, right? We had a small dip in January, all-time highs in January, flatlining, and now we're getting this dip going into March. Exactly kind of like these trends have happened. However, what's the one major difference? This extreme volatility on both sides. So we saw higher swings to the upside, higher swings to the downside. So we are following this core trend so far, just with a lot more volatility. So I wanted to get Nate on to share his opinion, share his take. Nate, I know you're not a VIX trader like a volatility trader, but I know you've been trading those two-way options where they've worked both ways to the upside, extreme moves to the upside and the downside. What is your take right now in the markets? Where do you think we're going next? Higher or lower? Do you think we're going to see more volatility, or do you think we're going to settle down from here?
Yeah, I mean, I do think that the volatility is here to stay for the medium to long term. By the way, sorry if my audio is not perfect. I'm down here at the office, so I'm sure the Wi-Fi is not as ideal as we'd like. But I think the volatility is here. I think exactly what you said. The swings are going to be bigger. They're going to be quicker. We're going to see really quick rotations. Like the sector rotations are happening really quickly. Energy's hot for 2 days. Staples are hot a little more consistently in this craziness, but everything else is very quick. Financials hot for 2 days, dead for 2 days. Defense hot for 2 days, dead. Like this has just been kind of crazy on the speed. But I think I talked about this yesterday. I think there's one huge mistake that investors can make right now. And it's probably not the mistake that most people realize. But I've seen it like a lot. And I think people have to really be careful with it, which is basically the mistake that they finally decide they can't take the pain anymore. The market's down and they start flipping to the short side, buying puts, whatever, at the exact wrong time. And I've seen this happen before. I really think it's like the biggest risk you can have in an ugly market like this is you get flipped onto the wrong side of the market late in the game, and then it rebounds finally just at the time that you're getting short. And so what often happens is that, investors, whether it's buy and hold or it's, just a strategy mechanically or otherwise, you're trading, the market goes down, you take a hit, you take a hit, you take a hit, then you get short and the market rebounds. And then you're taking hits on that side as well. And so then, the market's up like back near all-time highs. And what ends up happening is you're down even more than ever. So instead of using that upswing to get your portfolio back into good shape, you're actually doubling down your losses. And now the market's at all-time highs and you're down worse than ever before. So for me, I think the real key here is not just to say, okay, then double down and be bullish no matter what. The answer to that isn't just like, okay, buy more, always be bullish. But it is to, when the market is bearish and volatility is high, to have strategies that if the market starts ripping back in your favor, that those create wins too. It's not, now where the market starts flipping back and now all of a sudden you're taking losses because you finally flip down. So as a long way to answer your question, that's really what the two-way thing is all about. It has been killing it in the market drop. We just nailed 3 wins in a row because of the downside drop. But the whole idea is here, my new trade this week, I actually want to win even if the market pops up 5%. I don't want to then, be stacked to the short side where now the market rebounds and I'm taking losses. So in a nutshell, I think that's really the key here is that we are going to win if the market collapses, but we're also going to win if the market shoots back up and add profits to a portfolio that hopefully is going up as well. So I think the volatility is here to say. I think exactly what you showed there. Swings are going to be bigger, so for me, I want to trade right into the teeth of that volatility and use it to my advantage while it's here.
And Nate, it's funny, and we'll play Nate's class here, guys, in just a moment on how you can take these two-way trades. I asked everyone earlier if we think going higher or lower. Nobody said flat. I don't think there was one person that said flat top around. We're either going higher, we're going lower. Things are shaking and baking. And so that's why I wanted to bring you on today, because I think we can all agree with that one thing, that we're probably not going to see a market that's just literally flat for the next few weeks. We're going to see up, we're going to see down, we're going to see up, and we're going to see down. And what I really love about your strategy is I show a lot of the S&P 500, right? This chart's the S&P 500. It's typically not a super volatile index. However, these two-way options that you've been trading, that you've been teaching people, that they've been making money with, you don't just have to use it on the S&P. I think you've done some on the NASDAQ, which is much more volatile than the S&P. You've done it on Bitcoin, which is about twice as volatile as the NASDAQ. So a lot of cool different applications for the strategy. And the timing right now is really that's the strategy you want to be using right now, in my opinion.
Yeah, and we'll probably do a couple other ones. We might try to Apple this week, for example, because Apple is providing some really nice risk reward and moving way beyond its typical true range, which again just kind of juices up your potential. And by the way, I think just so everyone knows, like, the cool thing about this strategy is that it actually doesn't need these big, huge moves. It's actually designed for the red and the green lines that you have there, more like, a 0.25% typical moves on the SPY and the QQQ, because over time you still get big enough moves. And then when you get what we have lately, it's just kind of turbocharging it. So one of the cool things that and I try to do this with all my strategies is, yes, they have quote unquote the perfect time to trade them, which for two-way options would be right now. I mean, the absolute perfect time to trade it. But the idea is then the market gets more consistent, it changes gears, and the strategy still works. Because, sometimes you see people come out and they're like, oh, I just invented a new strategy that's designed for the last 2 weeks of market action. And then, 2 weeks later, the strategy doesn't work anymore. So this is actually based on 30 years of data. It just happens to be that right now is like the absolute best time to be trading.
Well, there you go. So guys, it's worked 30 years. All right. Well, enough chatting, Nate. Deanna, do you mind pulling up that strategy class playing? I believe it was you and Jack did it together.
Oh yeah, are we gonna play? Is that the one we're gonna play? That's a great one because it really talks about. Well, and by the way, it goes back to January where I said, hey, I think things are going to get really crazy. Then we might start seeing some big market. So you actually you'll see me from kind of my prediction. The market was going to get really volatile. So that's one prediction that we got right, and this is the strategy that we recommended to trade it. And I think we're certainly not out of the woods yet there. So yeah, this is a great presentation. It actually walks you through exactly what we're kind of talking about right now as volatility picks up. Great, but even if the market just kind of continues moving within its normal range, being prepared for either direction, I think, is super important right now.
Yeah, definitely. Especially like you guys are pointing in the chat with the markets breaking lower again. Right now, when is the bleeding to stop? Well, luckily, there's no reason I brought Nate on today. He's got this cool little strategy to win both ways. So, guys, let's go ahead and pay attention. Deanna, if you can get that rolling, that would be awesome. Thank you, guys.
Yep, thanks.
Let's jump in, guys. Of course, first, the drill. Profits and performance shown are not typical. We make no future earnings claims. Of course, if you're trading, you can lose money. Now, with this, every example is based on live trade signals that I send out in real time. So there's no hypothetical curve-fitted back testing, switching up the options to make it look better. This is all based on real trades. We're at about an 85.6% win rate so far, and then a 42% average return on the winners, 25% over a 7-day period on winners and losers blended together, which gives us that beautiful positive profit factor. And if you want to see our full term, just go to prosperitypub.com. It's all there. You can take your. So look at the current market. So this is the last 2.5 months on the NASDAQ. So starting right here and then going up through Monday. So I didn't include today because I took the screenshot a couple days ago, but all the way up to Monday, we are at a 0% return over the course of, 78 days, or whatever exact days that has been, some 80 days. And the interesting thing that I find about all of this, of course, is that the market has moved a ton in that period. We've had more gaps up, more outperforming 2%, 2.5%, 3% days, and yet the market has really gone nowhere. And this is really what I've been warning about for about the last 6 months, that the market is moving a lot, but it may not actually go anywhere. And if you're trying to predict it from a week to week basis, good luck, because I think that it's just too volatile. Even if you have a strong bias, too difficult to get your bearings week to week. And that's exactly why we're having the special broadcast today. By the way, thank you for joining me. Thank you for all those who said hello. Always great to see all of you there. And today, that's exactly what we're talking about. So in the next few minutes, I'm going to unlock what I am calling two-way options. Now, this is a new way of trading, one that I've been developing for the last 6 months, that allows us to profit whether the markets go lower or they head higher. And yes, I really mean that, because all we really need is the market to move. Now, as you can imagine, with all the volatility we've been seeing lately, the results have been really great, even in the midst of the economic and political chaos. As a matter of fact, over the last 6 months of beta testing the live trade signals that I've shared with people just like you, so far we've seen about a 25% per week, week over week, including winners and losers, and we've won over 85% of our trades on, taking into account every trade published so far. Pretty good. But get this, on July 3rd, I first shared this new way of trading with the beta testers. Since then, we've had 4 major pullbacks. One of those was up to 18% on the NASDAQ, and 3 rallies. Not great. Yet the two-way options have won all but 3 trades, posting 17 out of 20. It's actually 18 out of 21 now, because we took another winner this week. So that includes wins like 72%, 85%, 108% during some of the worst market drops, which is why it's so important to be able to win both ways. Now, obviously, with returns like that, we're talking about results that, stack up pretty nicely over time. If you start with $5,000, you're looking at a $25,000, $265 gain from live signals in just 6 months. So, we're talking about, again, pretty fast compounding, trading both ways. And again, that's not hypothetical historical. It's not switching up the options, just real trade alerts that I send out in real time. And that's why I invited you to today's session, and why we're going to be trading it live this week again. You see, with the increased volatility and uncertainty on the horizon, we talked about earnings, we talked about Trump, we talked about Fed, we talked about China, all that stuff. The timing is perfect, because at this moment, the ideal setup for two-way options is taking shape once again. And if things play out, we'll be targeting not our 18th, actually our 19th winner early next week, meaning we'll get the trade on today or tomorrow. Actually, tomorrow we'll get the trade on, and then we'll look for the opportunity to close out next week. And I'd love for every single person in the webinar to be a part of that. So welcome to Two-Way Options. Like I mentioned, my name's Nate. Thanks for being here. If you follow me, you probably know that our students have been on a roll the last year. Many of you follow me turning that 10K account into over 50K that I published live in Telegram, and showing a ton of people how to trade these kind of new way twisting options, and seeing some really fascinating results, like Beverly, 6,000, Roger up 15,000, Deborah, who said she's up 12K, not on my services, just on our live trade rooms alone, which is pretty incredible, and obviously has been a lot of fun to witness. And I've had a ton more. This has been an amazing last year. Thank you for all of you. I know many of you are here in the room today, and I can't tell you how much I appreciate all the feedback over the last year. But I believe, even with all the great markets we've had from, the 2023, 2024, 2025 and 2026 are a different animal. And while I definitely am not a fear-mongering bear market guy, hopefully you guys know that by now, I do think there are some very legitimate economic and corporate concerns over the coming months and years. And that's why today I want to show you how to trade this two-way options, which is a new way of trading that's hit with over 85% accuracy on real trade signals, even when the market actually did go down, which I think a lot of people have not been totally prepared for. And frankly, the timing couldn't be any better. According to the valuation analysis by one of the leading firms, stocks are more overvalued than they've ever been, literally ever in the history of the stock market. It has never been this overvalued. The last time we saw levels at this peak was the 2000s dot-com bubble. Again, very similar. We got the AI, overhype, overvaluation, very similar situation. And what came next was obviously not pretty. I'm sure many of you remember that and wish that you didn't remember that from the 2002-2003 crash. And more importantly, ended up at a 0% return over the next 8 years. Now, the time before that was actually in the 70s where we got that crazy valuation, the industrial valuation, and the market action was the same. Big major drops and then a 0% return over the next 12 years. And it's always important to understand it's not actually the pullback in the market that really hurts investors. It's the time decay of stopping that compounding wealth growth. So again, I'm not a doomsday guy. I'm not predicting this is going to happen in 2025. I'm not telling you to sell all your stock, but I do think there are very, very legitimate concerns to think we might get more flush outs. We might get a big correction. We might get that back and forth sideways 0% return market. And picking a direction right now is like rolling the dice. No one really knows how it's going to shake out. But here's what I do know. Nobody wants this to happen, right? Nobody wants to get stuck in volatile markets that don't actually go anywhere. Nobody wants to see their account stuck in the mud trying to, wait it out, because that's a bad place to be. And that's why I think two-way options are such a good opportunity right now, because we don't need to pick which direction the market's going to go any given week, any given month, any given year. We simply need the markets to move in either direction. Now, for example, if you look at two-way options going back to July, we had the middle of July where the market was absolutely heating up. Everyone was calling for a correction. You probably remember, way overcooked, RSI, stochastics, Bollinger Bands. I mean, this thing was way up there. And most people said, okay, now what do we do? Do we pull some profits, wait for a pullback, maybe wait for it to come back to support? But not me. I don't mind buying because, like I said, the two-way options are designed to pay regardless of if the market actually continues higher or if we get that big crater. So I placed this trade on July 23rd, sent it out to my members. And sure enough, the stock market actually fell out of bed, which, to be fully honest, is not what I was expecting. Yes, the market was overcooked, but a lot of times when the market makes all-time highs, it beats the all-time highs by 3 or 4%. So I wasn't necessarily expecting a big drop, but we used the two-way option. So while most people were panicking, I was cashing in. If you put $2,500 into that particular trade, it would have been about a $1,810 return over the course of just 2 days. If you put $5,000, you would have made about $3,620 on a 2-day trade, having no idea which direction the market was going to go and ending up pulling the trigger and profiting while the markets were actually tanking. Now, as great as that is, a little bit later, a couple days later, we jumped right back in. Now, this time, the market actually was looking ugly. This was early August. You probably remember the Dow tumbled. The S&P had its worst day since 2022. Jobs reports were bad. Inflation was bad. And then, just to make it even worse, we got the unemployment rates, and they were even worse than expected as well. So the market was looking very bad. If you remember, we cracked a couple key levels. I was actually starting to say, maybe we're actually going to get another 10% correction on this. And I could have waited for that. I could have tried to predict, wait for the 5% correction, find a baseline, look for an opportunity to get back in. But obviously, it's a lot easier when you don't have to predict anything at all. And so that's why I implemented the two-way option. Again, designed to pay whether the stock market goes down, whether it bounces higher, even if it just kind of grinds in one direction or another. Either outcome does not matter. So just to be clear, there's not a better outcome or a worse outcome. It doesn't actually matter. So I sent out this trade to our members, like I always do, and anyone who hit a few buttons, set up the position, and follow along could have absolutely crushed it. This time, the market went roaring higher. Again, if you guys remember that plunge in August and then that really fast jump back, which no one was really expecting. But if you had the two-way options, didn't matter. You won on the downside, then you won on the upside, about $1,119 in 8 days on that one. And the best part is these trades close out automatically as soon as that profit target is hit, meaning you can spend less time stressing about the next Fed announcement or corporate earnings like we were talking, and instead set up the trade, close your computer, and do whatever you want, whether you want to play some golf or catch a football game or maybe just spend a day with the family at the beach. taking each day as it comes, knowing that every single week we have another opportunity to target cash, regardless of if the stock market goes higher or goes lower. And I got to tell you, that is a great feeling to have. And like I mentioned, we actually don't need that big of a move. And this is a really important part. We're not just trying to capture the big moves, although I think we're getting the big moves, but we don't actually need that big of a move. So if you look at August 15th, you probably remember the market was full of noise like it's been for, the last year straight. And people, it's a coin flip market. But the good thing is that my coin has heads on both sides as long as the market makes a move. So on August 15th, I sent out a new two-way option trade to my beta members. All the criteria is in there. And anyone following along would have grabbed about $1,102 over the course of about 11 days on that trade. But here's the crazy part, and this is really important. During that time, the stock market actually didn't move all that much. In fact, from August 15th to when we're automatically locked out with a big, nice winner on August 26th, the S&P only gained 1.44%. Now, I don't know about you guys, but I don't think 1.44% over the course of 11 days is a very big move. But it means folks invested in the regular stock market made $36 over that 11-day period. But the beta testers had a chance to score about 30 times that amount on the same asset, on the same time, on the same move. So I'm sure you're starting to see why I've been absolutely obsessed with these two-way options, why I've been so excited about getting this presentation to you, and especially because of the uncertainty ahead in the coming years. So between those three trades, which are real trades that I sent out back to back to back, $2,500 in each would have paid out $4,032 in two-way income in 1 month. $4,000 in 1 month, having no idea which direction the market was going to go. And with the 85, now 86% win rate, could you imagine if you started with twice as much? You're looking at almost $10,000 in 30 days. Again, not having any idea which direction the market's going to go. So we're living in a time where folks are more strapped for cash than ever before. If you've been in my presentations, you've heard me get on the soapbox about this many times before, so I won't go over and over and over again today. But the point is, the current market condition is not emblematic of the current economic condition, which is that people are really living paycheck to paycheck, even at relatively high salaries, which is why the majority of Americans can't afford a $1,000 emergency expense. It's why American savings are at all-time lows. It's why all of the other stuff that's going on that's so separated on the main regular person economic level doesn't make sense with where the market's at. And again, another reason why there's so much uncertainty in the market as well. So obviously, I don't think I have to tell anyone how helpful an extra $1,000 would be, let alone $4,000 in the course of 30 days, because that's money that could pay a mortgage or pay off some bills, or maybe you actually are looking just to get some extra money and take a vacation or get away from your computer, which I certainly recommend that as well. But the point is, actually having an opportunity to get some extra cash is a very, very different circumstance than how most people find themselves in the markets right now. And keep in mind, we're not talking about during red hot markets. We're talking about up, down, unpredictable, and where the market really made almost no ground in that time. 0.9% return over that course. But if you followed the two-way options, you're looking at $1,800, $1,100, $1,102. Again, not having any idea which way the market was going to go. And that's not a curve-fitted backtest or theoretical trade. Those are real trades I sent out to members in real time that anyone could have fallen. So if you're wondering how this is working, it's not a straddle or strangle. It's not an expensive option combination. And if you're not familiar with those, the real issue with those is that you're buying a call and a put, and you need an extreme move in either direction. So, well, it might sound good in theory. It's actually what I first started testing out. There's a few major problems. Number one, it's extremely costly to place those kind of trades, because if you want to give it any amount of time, you're going to spend $1,000 to $2,000 a contract. But also, more importantly, you need a very big move to break even. This is where most people go broke. They need a big move, 4, 5, sometimes 6% in a short period of time. And by the way, if you don't get that big move, it's not like you take a small loss. You lose 100% of your investment if you get anything less than that big move. So the problem is the market doesn't usually make that big of a move fast enough. Okay, this line, fast enough, is really important. Most people don't put enough weight on this part. It's not the market won't make a big move. It's that you need it to happen in a very short period of time. So we looked at about 3 decades of data. The stock market only made a big enough move fast enough about 25% of the time. Okay, which means 75% of the time, the options are taking a max loss. So I don't know about you guys, but you probably don't want to trade a strategy where 75% of the time you're taking a max loss. And then 25% of the time you're taking, sometimes a medium win, sometimes a decent win, but 75% of the time you're taking the max loss. Just not going to work out, not going to be positive expectancy. Trust me, I went through the testing. It ain't good. And it makes sense because, most people buying options lose money. Just another example of when you're trying to fight for those big moves, you lose money, which is why the Chicago Mercantile Exchange reported 76% of options expire worthless. You guys see this. I talk about this all the time. Just another case in point of why that happens. But with two-way options, totally different game. Not only are the options way cheaper, they're less than $1 per contract, but instead of needing the markets to move 4 to 5, sometimes 6% in a short period of time, we only need the markets to move about 1.5% over about a 2-week period. So what we're doing is we're saying the market needs to move less, and then we're giving it more time to make the move. That's the secret sauce of two-way options. Less move, but more time to make it. And obviously, the odds of that happening are way, way better. Now, instead of winning 25% of the time, we're batting at over 85% of the time. That's a pretty big difference. And the really cool part is the volatility is going to increase our opportunities. It's going to make this even better. For example, October 25, we were leading up to the election. Sentiment was a mixed bag. Volatility was picking up again. Even experts had no clue. Of course, they never have any clue if the market's going to go higher or lower. All kinds of big headlines, but that's exactly where two-way options tends to shine. So if you're one of my beta members, you would have seen this one October 27th. Again, no real clue which way the market was going to go here. Either way, doesn't matter to me. If you put on that trade, you would have got in right here on the 25th of October. A few days later, market collapsed. Remember, this is 1 week before the election. And anyone who set that trade would have automatically cashed out $1,250. Didn't have to predict it. Didn't have to wait for an exit signal. You would have automatically cashed out in about 6 days with a big, juicy winner. The next trade rolled around October 31st. As soon as we got out of that trade, we said, let's go for more, put on the next one. This time, totally different story. Over the next few days, the market actually went higher. If you guys remember, got into that election night and market stormed higher. And how do you think the two-way options did? Win or lose? What do you think? First we went down, now we went up. Yeah, right. Why? Because all we need is a move. While the market was totally different than the previous trade, completely opposite directional, the end result was no different at all. $1,164. Again, we won when the markets rose and when they fell. I'm not even thinking about the actual direction. I'm not making any prediction whatsoever. Now, like I said, we do need the markets to move. Okay, so if they don't move at all, of course, we can take a loser. But there's a few really important things to point out here. First, we're not trading risky naked options. We're not doing anything with high, undefined, open-ended risk. The most you can lose is $60, $70 a contract, whatever you pay. That's the most you can lose. Secondly, you're not going to bet the farm because those trades are always very cheap, almost always less than $1 a contract. So you can start small and scale over time. And lastly, we have the data to back this up. Over the last 30 years, we expect the market to make that move over 80% of the time. So that's pretty good. North of 80% hit rate over a 30-year period, and even better in our live trading. Now, this is not a passing fad, not a fizzle that's just going to work for the next 3 months when Trump's, new in office. This is expected to work over 30 years with, 5 times more often winning than we lose. And again, we're not flipping a coin and hoping for the best. We're betting on a market anomaly that's worked over and over again, regardless if the stock market was at all-time highs or in the middle of stagflation at the all-time lows. And, well, not all-time lows, but recent lows. All we really need is for the markets to move, and that's exactly what they tend to do. For example, very next trade, November 7th, sent this one out to members, 65 cents a contract to enter, and this time, stock market dumped again. So down, up, down again, yet loved every second of it. $2,575 on that one in just a handful of days. And then we did it again, November 22nd. Next trade went out, 67 cents a contract. Okay, so you can start with a small or as big as you want. This time, the market's rallied. Okay, so now we've gone down, up, and if you bought 30 contracts, about $2K, $575 in income. If you bought 100 contracts, $2,300 in about 10 days. Okay, so again, up, down, up, down, up, down. This really trades in all these market conditions and doesn't care which way the market breaks out. And we've had Deb 2,600, Betty 4 for 4, Ken 5,000. But just wait until you get a shot at the all new two-way options because they've been dominating. I mean, this is basically become my strongest track record over the last 6 months. I mean, we've had a 3.31 profit factor on live real trades. And before I show you how they work, and by the way, open up our next opportunity tomorrow, you got to understand a little bit of the background here because a ton of people have asked, okay, why aren't other people doing this? Why didn't you figure this out earlier? All those questions about how this actually came to be. And I want to walk you through a little bit of the essence of this because it's so important to how, I kind of backed into this two-way option strategy. So a while back, I published a strategy that hit the world by storm. It was that really, at the end of the day, what makes it work so well is that we're targeting a small move at any point during a 2-week window so that our brokerage can automatically cash us out, paying about a 50% ROI on the trade. Okay, so at any point during that 2-week period, if we get the move, we should make some money, even if we predict the market wrong, which is very important. So you probably heard me talk about it. It's called automated options, a ton of members in that. And I've had the most positive feedback ever on automated options. Now, this way of trading, getting paid for that tiny move, has completely transformed investing for me and for hundreds of other people. And, my students, like I said, have raved about figuring out how to twist options and trade it this way. Modi and Jeff, 17 grand, that's awesome. Roger, $18,000. Honestly, when I first started doing automated options, I wasn't even planning on, kind of using this hack any other way. But since then, I've actually been able to take that same advantage in a variety of ways to stack up unique strategies in my arsenal that take advantage of the market in different ways. But there's one nut that I had yet to crack, which was how to do this in both directions at the same time. Thankfully, a while back, I came across that research that basically showed how big of a move you need and how often it happens. And that was what allowed me to basically take the same structure, but give myself an opportunity to hit with an even higher success rate. So when I first tested these automated options, I was, of course, only trading to the upside, knowing that stocks tend to rise more than they fall. But then it hit me, what if instead of only going for the upside, I actually doubled down and put the downside moves in as well? In theory, that gives you a much better chance of hitting the target because now you can win in either direction as long as you get that move. So I began testing and testing. I start with the strangles, start with the straddles. Didn't work. But what I needed to find was a sweet spot where the timing, basically how much time do you give the trade, the size of the move, basically how much do you need the market to move, and the potential, so the risk to reward, how that all lined up in one trade. And then I started issuing those trades out once I found that sweet spot to my all access members. And up until this broadcast, or until yesterday, I should say, they're really the only ones who have been able to see these trades in action. And so far, I think they could say it's been worth every penny because we've had an 85% win rate and a 3.3 profit factor on an income strategy. Now, I'll show you all the trades, the full track record here in a minute. But first, let's keep going because there's another example here from December 12th. Remember, I was telling you up, down, up, down, up, down. Well, December 12th, we got our next trade. Plenty of time to get in, by the way. Normally, you have a couple days even to get in and still pay a reasonable price. I mean, sometimes the market moves faster, but usually you have plenty of time to get in. And if you look at the charts, here's what it looked like. We needed a 1.5% move to the upside or a 1.5 move to the downside. Didn't matter to me which direction. Either way, two-way options will pay. Sure enough, a few days later, boom, got a big, ugly, nasty hit in the market. Everyone's waking up thinking, oh no, what a horrible day. And we're waking up thinking, what a wonderful day. My members cashed in on that one. I did as well. About $2,031 in a 6-day trade, having no idea that that market dump was coming. Of course, you could have started with as much or as little as you want. Again, about 60, 70 bucks a contract. That one was 64 cents, so $64 for a contract. And you could do 1, 10, 100 contracts, whatever you're comfortable with, and then scale up over time. Now, again, we're able to profit in that example, whether that was a surprise to the downside or if it was a surprise to the upside, it wouldn't have mattered. It's just a matter of whether the market actually moves. For example, September 12th, let's say that you were looking at the seasonals. September is an ugly, ugly month for seasonals. It's actually the worst month all year long. So a lot of smart traders probably were avoiding trading in September, hoping the seasonal pattern plays out. They'll save some money, get out of the market. But I'd actually rather have a shot to win regardless of whether history repeats itself or does the complete opposite. So September 12th, I sent out that two-way trade to my members. Let's take a look at the chart. Once I placed my trade, Didn't matter if the September seasonality played out like usual. Didn't matter if we bucked the trend and got a big move up. All we need is a move. So we're not predicting. We just set it up so that it can move in either direction. And either way, it's going to pay out as long as we get the move. So I placed the trade, went back to normal life. Sure enough, 7 days later, mid-September, got cooking. We moved way higher, actually ended up moving like 5% higher and clocked out with another win, about $2,230 in a single week, even though the seasonals would have told you, hey, avoid this kind of trade altogether. But up or down, it didn't matter. Now, again, that's a pretty powerful thing to have in your back pocket. I just want to reiterate here, on some of these days where you see those headlines, NASDAQ down 3.5%, it's pretty nice to say, hey, that's a good day for me when you have this strategy working, especially with the volatility that I think is going to continue to happen over the coming years. And even better, they're set up automatically. So you don't have to stop what you're doing when the market shakes up like this. You just let the market go to work and let that profit target get hit automatically. In fact, I recommend not staring at your computer screen because it's not healthy for most traders. Maybe that means spending some time outdoors. Maybe it means just trying to make some memories, get away from the computer while you can, and let this trade go to work. Either way, you can set up the trade, walk away over and over and over again each time there's an opportunity, and let the market go to work for you. I try to remind people of this every time I can because most people are shooting themselves in the foot by trying to overmanage trades instead of using an edge and then letting the market go to work. It all starts with your very first trade. Not today. Why does it say today? Tomorrow. Very first trade tomorrow is when we get our first trade. Now, when we set up that trade tomorrow, we don't need the market to crash. We don't need a whole bunch of indicators to line up and give ourselves a perfect opportunity. We don't need that. What we need is the markets to move in either direction. Instead of rolling the dice, we can be like Jason, who said, just consistently swing the bat and make money. I love that. I tell my members that all the time. We have an edge. We trust our edge. It's mechanical. Just swing the bat and keep making money. For example, December 27th, the next trade after the one I showed you before, when the market went up, down, up, down, up, down. This one was 71 cents a contract. Again, looking at the chart, doesn't matter if it goes up, doesn't matter if it goes down. Either way, it's going to pay out. And anyone who followed along, back to the downside. You automatically cash in. You guys probably remember we had the big sell-off before Christmas. Then we had that big sell-off after Christmas. More than enough movement to get us $1,338 in about 6 days. Now, I hope you can see why these are so powerful, because we're shrinking down that move, we're giving it time, and then we're set up to let the market go to work, and either way, cash out. We can profit if they fall lower. We can profit if they go higher, as long as we get a reasonable move. And the move is not that big. Now, obviously, I've said it over and over again. I think we're in about as uncertain waters as you can get. And so I think now is the perfect time. I can't imagine a better time to start trading two-way options. So I'm so confident that I'm going to give you my next 50 trades on the house for free. I'll cover more on exactly how that works in a moment, but it's all part of the new special offer to join two-way options today and get a chance to actually get 50 more two-way option trades for free. Now, obviously, the key here is structuring the trade exactly the right way to take advantage of the two-way opportunity. You have to get the balance where timing, size of the move, and payout potential all line up on each trade. That's why I'm going to show you everything you need to know to deploy your first two-way option right away. Tomorrow, anyone can start using this to cook up extra income right away, regardless if the market was higher, traders lower like we saw this week. I'm putting together our class tomorrow. You can start targeting these types of payouts with literally a couple clicks of the mouse. It's going to include full details from how to place your first trade to how the two-way options actually work in that masterclass tomorrow, plus how to set up that automatic target so that you can cash out, let the market go to work, walk away, and get your broker to cash you out, which is the most fun thing ever when you just come back and check the next day or a couple days later and you say, oh, winning trade. My balance is higher. A lot of fun when that happens. And obviously, I can't promise future gains. You guys know the drill, but I think the odds are pretty nice here. 30 years of data, 8 out of 10 times, live trading over 85% of the time we've hit so far. So once you get your hands on this, I think you'll actually be amazed at how clear-cut it really is. Very mechanical, very step-by-step, very structural. We have an edge. We trust the edge. We keep swinging the bat. That is how it works. And you'll be able to do this every single week. So this is not something that happens, like I said, if a certain amount of indicators line up, then we get into a trade. Nope. Over and over and over again, this can be deployed. Excuse me. Now, after just a few buttons, you can have the trade locked and loaded, and then you're done because you set up that target automatically and walk away. So maybe it takes about 2 minutes a week if you want to be a two-way option trader with me. Then back to your normal life, just like October 3rd, we got this trade set up. Remember, get it, no rush to get in, couple clicks, get your trade set up, set your target. Then about, what is that, 8 days later, market hits that target. You're not even paying attention. Hopefully you're doing something fun, hanging out with your kids or your grandkids, not panicking and watching the market, and end up making about $1,164 over that period of time without ever needing the market to make any crazy move. I mean, the market didn't gap up 4% over that 8-day period, just grinded a little bit higher, 3-4 days higher, and boom, hit a target. Of course, any brokerage account will work for those of you asking. Yes, 401k, IRA, risk defined. As long as you're trading options, yes, any brokerage can do this. And if you want to see just how powerful the actual trade is, well, then tomorrow we're going to do the next trade live, okay? So you can do that live with me, plus claim the next 50 trade alerts for free just by taking a membership in two-way options. We have a founding membership today. It's a crazy deal. I'll talk about that in a minute. Plus, you get the next live trade, which we're going to do tomorrow. Excuse me. Sorry for coughing. So we're doing this. The entire service is about setting up these two-way income trades over and over and over again so that you can leverage the exact structure that I use, whether the market goes up or down. Now, after live trading this for the last 6 months, the results are not just amazing, but it's also just very practical. It's small account friendly, really consistent. Average winner is about $1,290 based on 5K, including winners and losers. So that's just compounding week over week, including those winners and losers. And then the win right now is over 85%. Now, in just a moment, I'll show you how those numbers actually stack up. But first, let me just walk you through the membership. So you're going to get a two-way option trade alert each and every week from me, one that I'm personally trading as well, all my exact personal trade details on these two-way options. So 50 plus opportunities over the course of the year. Each one uses the same method that the live trade alert shows, about a $1,290 payout every week, winners and losers included. Sometimes the results are even better, like the one on July 3rd, where I actually sent this out, and then just a couple days later, anyone who took that trade would have actually made over 100%. Now, that's not normal, but it just shows you the potential. Some of these winners can be even bigger, $5,400 in 2 days on that trade. I wouldn't mind getting a couple more of those. And then the next day, well, actually about, 3 days later, we had another entry. Again, same thing, sent it out, text, telegram, email, about 5 minutes of work maybe to get into that trade, probably about 2 minutes actually to get into that trade, and then set it up and ignore it. Never look at it again, and you still get paid because the target gets hit automatically. $4,259 in 48 hours. Those babies happen back to back. So about $9,675 in profit in the course of 4 days on a two-way option. Now that, again, I'm not saying that's the norm, but boy, it is fun when you get those big moves and hit some of those nice winners. So, by the way, Jack said, hey, he was up 9,000. So not the only one who's making 9,000, which is kind of fun. Now, is it going to be $10,000 for two-way options? Well, up till now, basically, yes, because you would have had to be an HQ All Access member to get two-way options. So really, up until yesterday, getting your hands on two-way options would have cost 10 grand plus. But obviously, that's not going to be the case today. Hopefully, everyone would agree that the HQ members got a pretty good deal because it's been on an absolute tear the last 6 months that we've been beta testing it. But again, not going to be 10K, not 7,500. Like I mentioned, with the uncertainty ahead, I want every single person in here to get access to two-way options to join me for our live trade room tomorrow, because I think it could be the difference between being totally unprepared for these market drops or absolutely being able to crush it during these market drops and these market gap ups, by the way. So before I talk price, before I tell you how crazy this discount is and let you get in so that you can join me for the live trade tomorrow, let me just quickly cover the other perks in the membership. So the first one is the options class tomorrow. That's tomorrow at 3 p.m., where I'm going to teach you how the strategy works, how you can implement it, plus how to set the automated targets. Okay, I'll also show you, a couple other tricks and tips in there, including how to pick if you want to trade it on some other assets, like the SPY, like the Qs, like IWM, which is small caps, and a couple other assets as well. So you can actually do this on multiple assets every week if you want, regardless of which way the market moves. Not only will you get the training, you'll also get the calculators. Those are in the members area right now. You'll be able to use them exactly how I do to set up the risk to reward. You'll know exactly, hey, if Nate tells me to pay this much for the trade and our target is this much, what percentage ROI am I going to make? Because remember, we always want to have a good enough ROI in the trade to make it worth our while. Now, ideally, I'd say I'd sell this stuff separately because, you know, that's how we make money here as a business. We sell classes and strategies and courses separately. But of course, as part of this launch, we're going to include it for free. It's all part of the deal today in this founding membership. So I'm going to throw it in the calculator just inside the main membership, nothing extra you have to do there. And then I'll also do the tracker for you so that you can see every real-time trade alert. They're all in there, all in the tracker. You can easily match it up. Am I getting in the right trade? Did I get out at the right time? All that kind of stuff is in the tracker. And the tracker might be the most fun because that's where, you know, the results are sitting right now. Over 85% win rate, now over a 3.3 profit factor, now over 25%, now over 25,000 in total returns, all higher because of this week's win. And keep in mind, if that number was 25% per year, it would be about 2 times the S&P's annual performance, but it's not per year, it's per week. And that's outpacing the S&P by about 100x. Now, of course, can't guarantee we're always going to outpace the S&P by 100 times, but pretty cool to see it do it so far with real live trades so far. And based on this year alone, 5K is on pace to generate about $45,000 in profit without compounding. If you're twice as confident, then you're looking at almost 100 grand in profit potential without compounding, without building an account, literally just swinging the bat, like my friend Jason said. Now, obviously, like I said, I can't guarantee that's the future. I would love to keep winning 86% of the time. Can't guarantee it, but I'm hoping to. And my goal is really to actually outperform because I think the market's just going to get more volatile. But just to make it easy for you, I'm going to put all the risk on me here. You get the full satisfaction guarantee. You get 100 days to test run two-way options. If I don't deliver, if you're not seeing growth, no worries. You can call our team, get your refund. I have no issues with that. I want to show it to you, prove it to you, give you 100 days. It's like 14 weeks of live trading in these markets to let you see if this really works. And I'm not too worried because so far the results speak for themselves. And I think the advantage, the 30 years of data plus the 6 months of data are as big of an advantage as I've ever seen. So I'm not too worried that people aren't going to get the results they want, but just in case, you have that guarantee. And by the way, if the market tanks over the course of the year, if it just has more of what we've seen lately, liquidity drops, liquidity pumps, guys, we're in great position. That's what I love about this strategy. That's why I've been trying to get this to you for the last couple of months and moved as fast as I could. To be blunt, this is the program I wouldn't live without right now because I think the market conditions are in ideal scenario that, you know, we're going to continue to get those big drops. We're going to continue to get those big gaps. And whether we get that or not, I think now's the time to be able to trade volatility. So I don't want to be caught on the wrong side of the market. I hope you don't want to be caught on the wrong side of the market. Whether we go to all-time highs, whether we have that big correction, it does not matter. That's the beauty of two-way options. It legitimately does not matter because there's no wrong side. Okay, so it's not like theoretically, oh, it could go up, could go down, as long as we predict it. No, we're not predicting anything. Either way, we're going to win as long as we get that market to move. So up to you guys. You can go try to predict the market, or you can start using two-way options. You can start doing it with me every single week, over and over and over again. And if you want to join, which I hope you do, it's not going to be $7,500. It's not going to be $5,000. Like I mentioned, right now we're averaging $1,290 per trade, and so that's what we're going to charge today. $1,290, way cheaper than I originally thought we were going to do this. And just to make it even crazier, you're also going to get the next 50 trades for free, so an entire extra year of trading for free, meaning that you get that on the house with the same $1,290 payment. In other words, you get 2 years for $1,290 instead of 1 year, less than $650 per year, what I think is my strongest strategy right now in live trading. So if you want to get instant access right away, we're going to drop the link. You can also go to prosperitypub.com/win, lock in two-way options. Our next opportunity is tomorrow. We're going to trade it live together with real money in my real brokerage account. I'm going to do the masterclass. I'm going to walk you through how it all works. It's going to be a ton of fun, and you can join right now for less than $650 a year. Guys, I can't make it any more of a no-brainer. I can't throw the kitchen sink at you any more than trying to make it as cheap and easy to get started, plus give you 100 days to make sure you actually like it. So join today. Jump in. Let's do it. We'll trade it live tomorrow in real time so you can actually see how it works, not waiting around. Is there going to be a trade that triggers this week? Is there going to be a trade that triggers next week? Nope. We're getting after it tomorrow in a real live market section. So make sure you join right now. Get in there. You can log in. You can see the track record. You can get the calculator. You can get ready for tomorrow's masterclass. and our live trade. And I hope every single person in here joins me for that, because I think it's the biggest no-brainer of 2025. You can also call our team 321-888-3962. Then just press 1. That'll get you directly to our concierge team. Guys, give me a shot here. I mean, if you're not ready to trade volatility, I think this is the opportunity. That's just the most obvious thing in the world. It's why I've been working on it for months. It's why I've been live trading it for the last 6 months. The results are pretty incredible. And, I hope you'll give me a shot. I mean, if you guys remember, we talked about in July, market was going up. We put on a trade. Market went down. What did that mean? Win. Okay. Then early August, market was going down. We put on a trade. Market went up. Still win. Just back and forth, back and forth. So this is not just theory. This is not just, hey, maybe if we build a theoretical strategy, we could win on both sides. This is now 6 months of market gap ups, wins, market gap down, wins, back and forth, including last week, by the way, when the market rallied all week long and we took a win because the market moved up, and then immediately entered our new trade. And Monday, when the market dropped 3%, we took another win. So this is not just theory. This is really, based on real testing, real data, and live trading over the last 6 months. And I can't, be any more excited about it. So I tried to rush this to you. Some of my members, I was telling them it would be February or even March before we put a presentation together. But I really ramped up because I think this is the opportunity that we can't wait on. There's so much volatility right now. I think it's heating up, and I'd love every single person to be part of it. Hopefully, every single one of you is in the live session tomorrow, which is going to be at 3 p.m. So 3 p.m. Eastern, live tomorrow. We're going to do the trade, then put it in at the end of the day. I like to trade at the end of the day. I saw a couple questions about that as well. So I do like to trade at the end of the day. So we'll do the session at 3 p.m., go through the masterclass, get into the trade, and then I'll do Q&A. The session will probably last a couple hours because that's how it usually goes. So let me answer a couple questions, and then we would jump into the chat. How much money is needed? Average trade is very cheap, guys. Under $100 for the average trade. Is it day trading? No. The average trade is several days, usually 7 days or so on average. Will every trade be a winner? Of course not. We're targeting about an 80% win rate so far, hitting about 86% win rate. Every trade will not be a winner. Should we be worried about more downside? I think yes. I think we're going to continue to get those liquidity yanks in the market where it drops 2-3%. As a matter of fact, I predicted that last week, and what do you know? Monday, we already had one. So I think we're going to continue to see that. Can you trade it in an IRA or 401k? Yes. Any account that you can trade options in, of course, you can trade defined. Straightforward from a risk reward standpoint. So yes, you can do that. What's our next trade? Well, it's going to be tomorrow at 3 p.m. So I hope you're there. Max risk is whatever you pay for the trade. That's a big question I get. How much are we risking? Whatever you pay for the trade is your risk. So if you pay $70 with one contract, that's your risk. If you buy 10 contracts, $700. Whatever you pay is your risk. How do you close the trade? Well, with the automatic exit, you don't need to do anything. I show you how to set the exit. You set it up as soon as you open the trade, and then you walk away. You don't need to do anything to exit the trade. Is there any guarantee? Yep, you get 100 days. So 100 days, about 14 weeks, live markets to see how this really works. Trade in both directions. I mean, trying to make it as easy as I can for everyone to experience this and really try to give you, as big of a win under your belt with something that's prepared to trade at all these different market conditions. Do I trade those with my own money? Yes, I do. The performance, can't say anything more positive about it. I mean, this is live trading. So now over 85% win rate, over 3.3 profit factor, over $25,000 in profits. It's been a lot of fun. Do you need to be glued to your computer for the entries and the exits? No, you actually have plenty of time to get in on the entries, plenty of time to get out because you have the automatic target set up, so it's going to handle it for you. Really makes it quite mechanical and straightforward to trade. Are there any other methods in the masterclass? Yes, I'm going to go over a couple of bonus things that I think will be really helpful. Will it cost $24.97 a year? No, it will cost $650 a year. Well, $645 because you can get in for $1,290 for 2-year access. Is there a lifetime option? Yes, yes, yes. And it's the best lifetime option I've ever done. It's less than $1,000 to upgrade to lifetime. Plus, you get a bonus trading in there for lifetime members only. So that's it, guys. Again, I hope every single one of you are there with me tomorrow.